Hello and welcome to PropNext, the property podcast focused on issues that impact the future of the real estate industry. I'm your host, Gavin Morgan, and in addition to looking forward to today's and future conversations, if you'd like to know a little bit more about me, please look on www.propnext.com. That's www.propnext.com. Or if you'd like to chat privately, drop me a line on gavinrmorgan@propnext.com. That's GAVINRMORGAN@propnext.com on email. Delighted to welcome Andrew Moore onto today's show. Andrew, thank you very much for joining us.
You're welcome, Gavin. Thank you very much for inviting me. It's a pleasure.
No, look, absolutely, and certainly a treat for me to have you on. And I mean, Andrew, maybe just before we get into the questions on or the discussion on today's topic, which is sustainable finance, I'm actually very excited to have this conversation with you. Could you maybe just give our listeners just a few minutes on your roles and responsibilities and what you're up to in that role, please?
Yeah, sure, Gavin. So I formed a business with partners called Pamfleet in 2000, and we sold a majority of that business 20 years later in 2020 to Schroders. After a year of joining Schroders, we dropped the name Pamfleet from the title. Schroders Capital, I'm the head of their real estate investing business in Asia Pacific. I look after a team of 23 people at the moment. Schroders in Asia is headquartered in Singapore. It has offices in Hong Kong, Tokyo, Seoul, Shanghai, Beijing, and Australia, also not to forget Indonesia. The real estate effort is headquartered in Hong Kong, and we have boots on the ground in most, not all of those markets that I've just mentioned. And our approach to investing is what we call a value-add approach. So we're not core investors in Asia at the moment. It might be something to do in the future. Schroders as a group has got a little bit more of a core focus with open-ended funds and also REITs in Europe. But in Asia, we've taken this value-add approach, which is targeting returns that are higher than core returns through a lot of physical repositioning and renovations of buildings, rebranding, restacking, change of use, sometimes development from ground up, but mostly working with existing buildings. As you're very aware from the days when we first met working on the Nexus building back in the 2000s.
Indeed, Andrew, and I've still enormously fond memories of that and so many parts of that project. And it's an interesting space, just as you describe what you're doing, Andrew. I mean, sustainability is all around everything that you're doing, I'm guessing, at the moment, and presumably increasingly something that you're talking about, I mean, both on existing assets and what you're doing in the future, yeah?
Absolutely. It's completely unavoidable. Even if you wanted to avoid it, there's no option to do that now. We've been, from Pamfleet's side, we've been doing a certain amount on sustainability for probably 8 to 10 years now, I'd say, if I'm being completely honest about it. And that really started when we raised our first blind pool commingled discretionary fund, and we became a fiduciary. And one of our investors asked us to start contributing to the GRESB annual reports, whereby you submit your data on each individual building, which touches on the power usage, for example, energy savings that you've been able to implement and things like that. So very, very sort of granular information on a building by building basis. And GRESB's become one of the kind of key metrics that fund managers and investors use. So we've been doing that at Pamfleet now for a number of years. Our scores are in a certain zone, and we try to improve those scores every year. When we joined with Schroders, we discovered that they were able to achieve maximum scores, 5 stars essentially, for some of their buildings at some of their existing funds in Europe. So we've had a very steep learning curve to try to figure out how we can make bigger gains, bigger improvements in sustainability on a sort of individual building basis and a portfolio basis, and it's an ongoing thing.
Yeah.
So yeah, it's unavoidable. So we ourselves now have a full-time dedicated ESG or sustainability person who's got a construction background and was originally our project manager.
Yeah, it's incredible, Andrew. I mean, I was just talking with a colleague a few days ago about the huge number of roles in real estate generally now that just didn't exist 3 or 4 years ago. And yeah, I mean, this is a space that is rapidly growing in all organizations in our industry, and also rapidly sort of ESG teams are becoming big pieces of businesses like yours, ours, and others. And and then that leads us on to really one of the things that I wanted to talk to you about today, which is sustainable financing. I mean, something else that hopefully, potentially drives the industry further in the right direction around sustainability. And I wanted to start by asking you, Andrew, just in your experience, how does sustainable financing differ from traditional financing? What are the sort of key differences?
Okay, so you've got the green bond and the green loan markets, which are both, they're separate and distinct, but they're both expanding very rapidly. They both have the potential to provide lower priced capital than through, if you like, traditional financing methods. And that capital should be directed to support the expansion of green buildings, financial products, and investment in sustainable buildings through loans. So specifically, there are essentially two distinct groups of financial products, and the bankers will refer to these as use of proceeds instruments and margin-linked instruments. So in a margin-linked instrument, this would be issued under a sustainability-linked financial principle. A margin-linked instrument would be used for financing the acquisition of a building, for example. And the margin or the coupon that's paid under that loan, or it could be a bond, but the margin or the coupon that's paid would be linked to the ESG score, for example, or a KPI performance target of the borrower's performance in managing that building or that asset. So that's your margin-linked instrument. Then you've got the use of proceeds instrument, which are specifically proceeds that would be probably more likely to be raised under a bond than a loan, but it could be under a loan. But these would be proceeds that must be used for projects to deliver clear, specific environmental benefits, for example, or sustainability, or social. It could also be social benefits as well. So you have these principles that the bankers will follow, and that borrowers must also follow, which are relevant principles under the different instruments. Margin-linked instrument, for example, would be the relevant principles would be sustainability linked, and under use of proceeds, it would be green bond or social bond or sustainability bond principles.
And Andrew, I realize before I ask my next question, this is a space that's relatively speaking still in its infancy, but follow-up, particularly as it relates to sustainability and the environment, is critical. In these types of instruments, are there good processes in place to ensure that the money is used or paid as it was intended? Or is it very much agreeing it at the beginning and there's just trust between the parties that everything will play out or be deployed as was originally intended under the initial terms of the financing or the financial instrument?
No, so for a margin-linked instrument, where in the form of a loan, and we've taken out two of these loans in the last 12 months to finance specific investment project. You're very much measured on it because there's a financial incentive, and you don't get that financial benefit or that financial incentive at the outset. You have to work towards it. So There are, as I say, there are performance KPIs on the borrower which have to be achieved, and it would be probably fraudulent if you claimed you'd achieved one and got a financial benefit when in fact you hadn't. So absolutely, they're measurable. They're measurable KPIs, yes.
Yeah, that's good. That's good to hear. And Andrew, then the inevitable question, is it presumably it's financially compelling? I mean, it would be good to know that it is, but I'm assuming that green loans or green instruments are at a financial benefit to borrowers for the commitments that they're making? Or again, is this just an assumed practice and is it assumed that there will be an adoption of this practice moving forward and they're the same price as traditional financing?
No, well, that's a great question. There is clearly a difference between sustainable finance pricing and traditional pricing, and at the moment, the pricing differential. I don't know if I can generalize for the entire market because we don't see it. We're not a bank. We only borrow what we borrow. But from my understanding, from speaking with our banks and from the products that we've got. I can't call it an industry standard, but it seems that 5 basis points is the pricing benefit that you can potentially get from having some sort of hopefully meaningful targets and KPIs for the sustainable finance piece versus traditional. So it's not a huge saving, but it is a meaningful saving. If you multiply that up in terms of a cap rates, then you can see that there would be a valuation implication on that, and there would be it would be beneficial to your IRR through an investment process to have that kind of saving. So there's definitely a benefit from it. I think it's early days in terms of the development of the industry, and the pricing will become more presumably more sophisticated. But I've asked this question myself of will everybody eventually have green loans and sustainable financing? Will there not be an option to not have those? And I think the jury's out at the moment. It doesn't sound to me as though that is going to be the case, because it sounds like people want there to be a differentiation, because otherwise the risk of greenwashing is too great. So we're not at that stage yet.
Yeah, unfortunately, that is a big risk. But Andrew, I wanted to just pick back. I mean, I thought it was really interesting. You talked about the financing cost or financing pricing impact on real estate valuation. That to me is one component of where a valuation could be positively impacted by sustainability. But generally speaking, using green finance to construct an asset that is more environmentally friendly, are you seeing at the moment, or do you think in future we'll see premium pricing for assets that are built in a sustainable way, particularly assets that are built to be sustainable or adjustable or adaptable so that they can continue to be at the cutting edge of sustainability in future? Or do you think yields stay around the same levels?
I think it's definitely happening. It's probably being driven more by the MNC tenant at the moment than by the developers. But when a tenant demands a certain quality of building, a lot of this is around the environmental rating that a building gets, gold or platinum rating. Then developers have to take note, otherwise they'll end up owning products that are substandard and unable to achieve premium rents, and there's a clear valuation impact, isn't there? On that. But if you're talking about office projects, then you've also got concerns about redundancy in the older quality grade B and grade C buildings, and the idea of flight to quality there, particularly with the sort of work from home opportunities now that exist as well. So a lot of investors will not consider buildings below a certain standard in terms of the quality, whether they're A or A star, on which benchmark you're using, and B in terms of the LEED or the BREEAM or the platinum, the rating they're able to achieve.
Yeah, and Andrew, absolutely. I mean, I'm seeing that myself. I mean, organizations already, even in markets like Hong Kong, big occupiers insisting on being in buildings that are rated in a certain way, which, I mean, could be very costly for groups that aren't trying to stay abreast of the latest standards and targets as they relate to sustainability. Just sort of back onto the loans for a second. Are there sort of specific core components to a sustainability-linked loan? And if there are, could you maybe run us through the sort of key ones?
Sure, yeah. So for a sustainability-linked loan, one of the first components that's these are differentiators from traditional loans, of course. One of those components would be the selection of the key performance indicators that are embedded in that loan. And there's no kind of prescriptive arrangement for this or legislative arrangement for it. It's very much between the borrower and the bank to discuss and agree that. And individual banks will have their own kind of expectation, I think. But we found, so it's not cookie cutter, and we found that the borrower needs to clearly communicate with the bank our sustainability objectives, or what we think are achievable, and maybe with some sort of stretch objectives as well, and how they align with the investment proposition for the particular acquisition that you're making. Obviously the banks want as much transparency and disclosure around that as possible, and then you can start to have conversations about certification, for example. So if you're able to achieve a certain standard, that's fine. But that's only one part of it. It doesn't have to be about getting a platinum rating. Because if it was only about buying top-rated buildings or developing top-rated buildings, then basically everything else would be completely redundant, wouldn't it? So we've got a sort of scorecard approach to these KPIs, which I think it's bespoke, and we've put it together ourselves. I think it's quite innovative, but it means that we can buy underperforming buildings or poor quality buildings in terms of environmental scores, as long as we do something significant to improve it. So we're having an impact on those scores. So then the other kind of components of the sustainability-linked loan would really build from these target KPIs. But I think if you get the KPIs right and the targets right, and do it in a way that everybody understands what it is you're proposing to do, you obviously will have some sort of negotiation with the bank, and it's not a rubber stamp, and everything's got to be properly done. Then you build on that, and then it's really about calibrating those KPIs. How are we going to measure them? How are we going to report on them? If they're really ambitious, that's good. But what if we fall short in some departments? How do we measure that? And then how does that feed into the loan discounts that we're getting? The sustainability benefit that we're getting. How is that calculated and measured? And how do we get that? How do we get that benefit? And as I said earlier, we don't get it from day one. So we have to achieve it. So then you build on the reporting and the verification side of it. And verification, how is that done? You need to pay a consultant, an independent consultant, or can we measure something with the help of our building managers? Measure energy consumption, for example.
Yeah. Okay, well, I'm a big fan of paying consultants, Andrew, for obvious. That will hardly be any surprise to you. So just, Andrew, as we head toward a conclusion, and thank you for that, so it's always seemed to me, again, I work in a market where there maybe hasn't been a huge amount of high-profile activity or as much as we could see around sort of developing or particularly refurbishing or redeveloping real estate in a more sustainable way. Seems to be a huge marketing advantage and opportunity and credibility opportunity for big groups to try and take a leadership position in that space. I wonder if you agree with that, and are Schroders a group that are seeking to take leadership in the sustainability space around real estate?
Yeah, I mean, Schroders' approach is about impact and actually making a difference. So there obviously is a lot of greenwashing goes on, and people talk talk about things, but at the end of the day, you really have to know that you're making a difference. So we are measured, our individual business area performance is measured. We have objectives being on ESG performance at the country head level, and all investment staff have commitments and targets in connection with sustainability. We have a very detailed real estate with impact policy. So there's no doubt, and we can make a difference. There's a lot of energy being used by the built environment. It's a huge sector. You know, I've talked about value add, so we're dealing with a lot of existing buildings and really trying to make a difference there. If you think about the green building development sector, then that's absolutely enormous. And it's not necessarily energy efficient to be making steel and pouring concrete, but it's going to happen. There will be $30 trillion of development in over the next 10 years. And banks who finance that are also able to influence the behavior of the developer by making loans more attractive if developers can do certain things there. So that's a huge space as well.
Okay, well, Andrew, I think that's extremely interesting. And I also totally agree with you that this is a space where taking responsibility and standing up for what's right for the future of the industry, as well as for the future of the planet, is so important. And it's important that we see as many individuals and organizations taking a positive position in this space as we move forward. It's been absolutely terrific having you in the show today. And Andrew, thank you very much for joining us.
Thank you, Gavin, for inviting me, and I look forward to seeing you in person soon.
Indeed, me too, whenever that may be. And that is Andrew Moore, Head of Real Estate for Asia Pacific for Schroders. Andrew, thanks again for your time.
Thanks, Gavin.
So that's a wrap, and it just leaves it for me to thank you very much for tuning in and listening to our conversation. And as I mentioned at the beginning, if you'd like any information or you want to have a chat, drop me a line on Gavin R. Morgan at propnext.com, GavinRMorgan at propnext.com. Or there's more information, as I said earlier, too, on www.propnext.com. That's www.propnx.com. I look forward to speaking with you in future podcasts, and thank you again.